And Yahoo is another stock that got slammed today, down more than 6%. And that's despite encouraging news that the company will be one of the biggest beneficiaries when Alibaba goes public later this year. Yahoo owns nearly a quarter of the Chinese e-commerce giant. So what does Yahoo stand to gain from Alibaba going public? And what could that mean for Yahoo shareholders? Josh Lipton takes a look.
But I'm full of confidence.
Jack Ma is bringing his company public, but what Alibaba's public debut will mean for Yahoo shareholders is still an open question. Yahoo owns 23% of Alibaba and will sell 9% of that stake in Alibaba's offering. Exactly how many billions of dollars that will net Yahoo depends on Alibaba's valuation and various tax considerations. Estimates range from $7 to $11 billion. But what will Yahoo do with all that money? Yahoo CEO Marissa Mayer was asked that very question today at a conference in New York City. She said the company will act as a good steward of capital.
We had previously sold part of our stake in Alibaba and gotten the proceeds. Right. We returned some of those proceeds to shareholders. In fact, the majority of the proceeds went to shareholders. But we did make some smart investments in the company in terms of building out talent, building out technology, and platforms like Tumblr.
Analysts say Yahoo could use the capital to pay a dividend or increase its buyback program. That would provide support for the stock price and send a message to investors that Yahoo's leaders are confident that their stock is a smart investment.
It does convey to investors that management, this new management team, is putting their money where their mouth is.
Yahoo could also use the money to do acquisitions. Mayer has completed multiple acquisitions, including Sumly, a mobile news app, and Tumblr, a blogging service. Analysts say Mayer should now be on the hunt for bigger acquisition targets.
An acquisition of a company such as AOL, which we laid out, may make sense because AOL actually is stronger than Yahoo in video views. They do about 1.3 million videos per month. Yahoo does about 600,000. If you combine those two companies together, not only is there a lot of cost synergies, but you'd get that revenue growth, you'd get that strong positioning in video that Yahoo seeks.
Mayer would have to be careful when choosing acquisition targets. Unlike Facebook, whose core business is performing well, Yahoo remains a turnaround story. Investors might not give Mayer the same leeway to make risky bets as they do for Facebook's Mark Zuckerberg. Bottom line, the jury is still out for Yahoo shareholders and whether to stick by Mayer's strategy for Yahoo or to just sell and perhaps own Alibaba shares instead. Josh Lipton, Nightly Business Report, Silicon Valley.